Okay, today I took a loss, and I think the reason I took a loss because I didn't have my charts marked up correctly. So all morning we was going up, all morning. We got a higher time frame, 4 hour bearish, fair value gap. We closed over it at 10 o'clock. So we closed over this bearish fair value gap at 10, which is good. So I took that as still bullish. Still think we're going up. So you go back to the 1 minute. All right, and what I wanted to see to show that we was going up, you had this 15-minute fair value gap, bullish 15-minute fair value gap. So a lot of plays, what I like to see is price come back down into the 15-minute, the bullish 15-minute fair value gap as an internal to external play with SMT with the NQ. So I trade NQ or ES, whichever one looks good. So the ES right now is on replay. I don't know how to get the replay on both of them at the same time. So anyways, 10:03, 10:03. All right. So what makes the SMT is this. This is a 15-minute bullish fair value gap. You see that? This is the 15-minute bullish fair value gap. And on And on the NQ, this is the 15-minute bullish fair value gap. So I just marked them. Then I went to the 1 minute and waited for one of them to at least come back to it after creating it. And you can see NQ came back to the 15-minute and hit. ES didn't. That creates your SMT. That's your divergence. So we will have SMT where it touched NQ and then touched ES. So that's what you want to see. You like to see an SMT. So now I'm just going to go back to showing the ES play. So anyway, so I figured, like, so what I've learned over time is to not really care about the 1R. I want to get 1R, 1 to 2R, but to try to get less losses, because that's what everybody talks about, is you just got to take less losses. And it's hard to figure out how to take less losses. You got to get more wins than losses. And that's kind of hard, what I found out. So what I've been doing lately is just the next pivot high, either I'm going half break even or break even. Just depending on how I feel. But for sure, if I'd have went half break, if we'd have got it right here, this pivot, I'd have went half break even. And here I would went break even. And if it gets there and come back and take me out, that's fine. But this is my trade. I got in. I put my stop about right there. And as soon as this counter closed, I got in. So the plan was, because of the SMT, you would think we would at least push to the next pivot. So the plan was to at least push to here and here and then break even. And you see how far 1R is? And I don't care, because what I used to do was go 1R is either going to be 1R or a loss. And I will have a whole lot of losses. So now it's like I'm having a whole lot of break evens, but I'm not losing as much. So I'm having more break evens and more winners than my losses. And that's what everybody say you need to get. You need to get more winners than losses. So a lot of times it don't go. A lot of times I get to right here or right here and break even. It'll come back down, touch my break even, and then go to one off. You just got to deal with it. I mean, you just got to deal with it. I mean, you just got to figure out a way to take less losses. So this is just my way of doing it. It's been working in back testing more than anything else. So I'm just something I'm working on, and it's kind of hard to get your brain wrapped around it because you just hate to see if I'd have left my stop right here that it would have worked. Yeah, this play would have worked, but the other 3 or 4 you take wouldn't have worked, and you end up losing. So I mean, I've been through it all. So I'm just saying, if I get to break even, I'm happy. Break even is happy. Once I get to break even, I don't even watch it no more. I'm gonna get a beep on my watch when something gets hit. So if it break even, I'm gonna get a beep. One all, I'm gonna get a beep. So my whole goal is to get to break even and just let it ride. And it seems to be working. You just gonna take some break evens. You just gotta accept that. But anyway, so I thought we would at least get to here because sometimes it don't work. And we can play it and I can show you that it didn't work. You see, I got taken out quick. It didn't even go up a little bit. It went up a little bit. Well, it went close to right here. I at least would have went half break even, but I didn't get to where I wanted. So I just let this stop loss. I didn't get to here because I would have de-risked if I got to here. But I didn't even get to there. Because a lot of times it do this, come down and go on back up. It don't even hit the stop loss. But this one didn't work. But I'm going to show you why I think it didn't work. I'm pretty sure it didn't work. Or whether it worked or not, I wouldn't have never got in it if I'd have seen this from the start. I just missed it. I don't know how. This morning when I was marking on my charts, I missed this 1 hour break even, 1 hour bearish fair value gap. So that's a 60-minute bearish fair value gap. Now, if you go back to the 1 minute, I wouldn't have never entered this shit. I wouldn't have never entered. So the reason I don't take a lot of trades because I got to have everything clean. And you don't want to trade into because you're basing everything on higher time frame. So your bias is based on your higher time frame. You're just using your 1 to 5 to enter. So based on the higher time frame, why would I try to go long if I had it marked up? Why would I try to go long inside this bearish fair value gap? You'll be looking for shorts in a bearish fair value gap, not longs. So I wouldn't have never gotten in it. So it just would have saved me a bunch of money. But shit happens. I just want to do this trade replay and just try to learn. And anybody have any questions, feel free to ask me. Oh yeah, another thing, like I said, I'm new to this, so you gotta bear with me for this. But another thing that you use is this. So I have the lower time frames, 6 charts. 1, 2, 3, 4, 5, and 7. All right. So at 10:04. So we go 10:04. Well, it's kind of hard to see now because all of this. So let's do this. Let's do this. Let's just show you this way. So let's show you this way. So at 10:04 on the 5, you want to see you don't want to see any fair value gaps. So you want to close above the fair value gap, and you don't want to see any more to stop it. So you want to try to get in a trade when it's a chance of it's running. That's when you want to be in. You don't want to be in a trade it run into another fair value gap. So like this. So at this time, everything looked good. You don't have any more fair value gaps to your left. So you don't. So when I'm ready to enter this trade on the 1 minute, on the higher ones like the 2, 3, 4, 5, and 7, I don't want to see any smaller fair value gaps over here because I don't want to run into it and then it's just gonna play around some more. It's just gonna go in there and do this and come down, go back up. Not saying it won't go through it. I mean, you just don't know. It might go through it, might not go through it. But that's not what I'm looking for. I'm looking for clean price action. No fair value gaps to worry about. Just some pivots. Hit the pivot, move de-risk. Hit another pivot, de-risk. Hit another pivot, de-risk. And just move your stop up as it goes. Now, by doing this, like I said, you might not get but 1 or 3 trades a week. You see? But that's fine. That's all you need to make some money. I mean, you don't have to take a lot of trades, which I have taken a lot of trades, and it just your day just fucked up. Well, I'm gonna stop because your day just messed up from stress and everything. So I'm trying to show you what I'm talking about. So just say we was gonna go short. This is not short. I mean, I took a long this morning, but just say we was gonna go short. So what I was talking about as far as on these 7, 5, 4, 3, 2, 1. If I'm in on the 1 minute going short, I don't want to run into see this 2 minute. So just say I was gonna take this short after this 1 minute close below here, 567. I wouldn't want to take it because you see how if I get in here, say this close right here, that's 567. But right here at 559, you're gonna run into that's 8 points. You're gonna run into some more fair value gaps. That's not what you want. You want it to be clean. So once you come down, I mean, you can have some more fair value gaps, but give it time to make some points so you can move to break even. Just give it time so you can move to break even. And that way, if you move to break even and it don't, if you get to break even and it bounce back up, I mean, you lost nothing. But you was in the trade to try to make something. I mean, I know I'm not the best explanation. I mean, I didn't get the best explanation. Like I said, I'm new to this, but if you want to talk about this stuff, I love to talk about it. Just helps me go over it, and being a teacher maybe help me learn better. Um, it works. It's just you gotta be patient. Oh, that's all for today.